this is Mukesh Kumar. Today we are going to learn about company account issue of debentures. You might have heard about shares, but you might have not heard about debentures. What is debentures actually? Actually, the financial structure of a company consists of two things, that is shares and debentures. When you talk about shares is called internal liability, whereas debentures is called external liability. This you might have seen in the lesson called formation of a company and third stage in that lesson. So today I am going to teach how the debentures are issued, but before that let me make it very clear. Shares are never paid back, whereas debentures are paid back. Like for example, if you take debentures from a company, the company will give you some terms and conditions. Under those conditions, for example, if the repayment condition is after 5 years, so the company will pay back debentures money 5 years, but they will be paying interest for all 5 years. Now, there is one more thing. When you take debentures, there is a practice that they prefix the interest rate. So, there can be 9% debentures, 10% debentures or anything. So, they write just percentage before writing the debentures. Now this interest will be paid by the company to the debenture holder every 6 months or yearly once. Why every 6 months? Every 6 months means when they pay every 6 months, the burden for payment of interest will be less on company. If they pay it in one go, then the burden will be more. So this is how the system works, and at the end of the expiry period, then the debenture amount will be paid either at face value or at premium value, whichever. Now another thing is there is a very close relation between debentures and shares. All the conditions of shares also apply here. For example, shares are issued at par, at premium, at discount. Here also debentures are issued at par, at premium, at discount. Shares are issued other than cash consideration, whereas debentures are also issued other than cash consideration. Only one change will be there. The shares are not paid back, but debentures are paid back. So let's see what is meant by debenture with this example. Meaning of debenture. Debenture is an instrument or document issued by the company acknowledging a debt. Debt means loan. So it is issued by the company. That means they are raising the fund from public, and it is a type of loan or debt. It has term of repayment. As I told you, the repayment means if the debentures are issued for 5 years, so after 5 years they are going to pay back the money. If the debentures are issued for 10 years, they are going to pay back the money of the principal. So that means the complete principal amount will come back, and also payment of interest at a rate specified at the time of its issue. So when the company is issuing debentures, that time only the rate of interest will be decided, and same rate of interest they will be paying. So as I told you, the interest can be paid half yearly or yearly as the company may feel. Then it is this you can write as a characteristics which I have included in this. It is an written document. It's a written document. So everything is very clear, just like certificate. It is a part of the external liability. As I told you, the capital will have internal as well as external liability. So this is a part of external liability. It can also be called as bonds. So we can call as bonds. So debentures are mostly type of bonds, and then the issuing company need to pay back the debenture amount after the expiry of the period. So after certain period of time, they have to repay the debenture money back to the debenture holder. This can be seen with the help of one example. So I have made one example here. MK Limited issued 5,000 9% debentures of rupees 100. So the cost of mostly debentures will be 100 rupees and multiples of tens or multiples of 100. So this is what this is called face value. So 9% debenture. 9% here means this is prefixing of debentures. So they have prefixed 9% as interest rate. And the cost of each debenture is 100 rupees. Payable rupees 20 on application. So first stage application 20 rupees, 40 on allotment, that is second stage, and balance on call. So what will be the balance? 40 plus 20, 60 minus 100. These debentures are not issued at discount or premium. So this is a very simple question. The debentures are redeemed. Redeemed means are redeemable, means repaid at the end of 5 years. Past necessary journal entry. So I have taken the dates 1st January 2015 to 31st March 31st December 2019. Then the journal entry will be written like this: bank account debit to debentures application. Now debenture amount number of debenture 5,000 rupees, 5,000 debentures into 20 rupees, so 1 lakh. Then second entry, debenture application to 9% debenture. You have, when you write debenture, instead of share capital in case of shares, we have to replace that to debenture account. So when you write debenture account, this 9%, 8%, 10%, whichever is given in the question should be representing here. So debentures application account debit to 9% debenture, that is 1 lakh. Then the second stage on I have taken the difference. This is 2 months. After 3 months, this date I have, imaginary date I have put. Debenture account, debenture allotment account debit to debenture account 5,000 into 40 rupees. In allotment it is 40, so this becomes 2 lakhs. So this is for transferring of debenture allotment money to debenture account. Then here next entry is bank account debit to debenture allotment, so 2 lakhs again. So first stage, second stage over. Coming to the third stage. In third stage, calls. So debentures calls account debit to 9% debenture account. Here call money, I said balance, so balance is coming 40 rupees. So 5,000 into 40, again 2 lakhs. Then I'm receiving money from the debenture holders or for the debenture amount, that is bank account debit to debenture call account, so that is 2,000. So you can write narration being debenture money received. This is what is the issue entry. This is what is the issue entry of debenture. Now in case if there is a redemption or repayment of debenture, so this is again my imaginary journal entry, not necessary, but I am explaining here with this example. Now in 2019 the company is redeeming the debenture, that means repaying back debenture. So here 9% debenture has become debit. Previously it was credit, now it is debit. To debenture holder 5,000 total amount, that is 5,000 debentures into 100 rupees as face value. So this becomes 5 lakhs rupees. Then second entry, debenture holder account debit to bank account. So the company is paying through bank, that's why bank is credited same amount 5 lakhs. So debenture holder account debit to bank account. Here I did not teach you how to calculate interest. The interest calculation in the other entry I will be teaching. You can write the narration being 9% debentures are redeemed at the end of 5 years. So I hope you understood this question about the debenture. If there is any doubt, you can write to my comment box. Please like and subscribe my channel. Thank you.